Good afternoon. I'm Patrick Armstrong, Chief Investment Officer at Plurimi Wealth, and it's the 25th of January. So interesting start to the year. Markets always seem to be interesting, and it's actually gotten to a point where actually things are pretty normal. It's a very different world. It always seems to be a different world we live in. But if you look at price earnings for equities, if you look at the S&P 500, for the MSCI World, S&P 500 is trading at 17 times 12-month forward forecast earnings. The MSCI World is trading at 15.2 times 12-month forward forecast earnings, and that's exactly in line with the 25-year average for both of those indices. So 2022 was a very difficult year. Equities delivered earnings in 2022, but they fell 18%, and that was all multiple contraction. And what happened last year was equity multiples normalized, got to exactly normal. And the 10-year yield, almost the opposite direction. 25-year average for the 10-year Treasury yield is 3.4%. And as I speak right now, the 10-year Treasury yield is 3.4%. So we're in an environment where equities are priced the same as they have been over the last quarter century. Treasury yields give you the same yield as they have over the last quarter century. And all things being equal, you've generated returns when you buy assets at normal prices. This year is really going to come down to picking the winners within asset classes. It's not that the overall market's incredibly cheap. It's not incredibly expensive either, but the companies that are able to deliver earnings growth, defend their profit margins, I think are set to deliver positive returns this year. Fixed income has been an asset class we didn't want to touch last year, but yields have risen to the point now where you're being compensated with returns that are probably going to be higher than inflation now for the next decade if you buy a treasury. If you buy bank debt, you're getting another 1.5% premium on a spread over treasury. So we actually like short duration bank debt where you're getting 5 and 6% yields right now from AAA or AA and BBB rated banks. We like equities that have defendability of their margins, luxury companies, energy companies. We also like agribusiness companies, and those are companies that we think are going to meet and beat earnings expectations this year. So it's a year that feels different because there's a lot of things happening in the economy, but the one thing that's there for all investors right now is reasonable valuation. So if you can pick some winners within an asset class that's fairly priced, generally that sets a backdrop that delivers good returns over the medium and long term. So that's going to be our focus for this year. It always feels scary to put capital at risk, but I think this year has shown that assets not being overly expensive, any news that hasn't been terrible news, you have seen rallies in both equities and bonds to start 2023, and we think we have a little bit more ahead of that as the year progresses. So that's my quick thought for today, and I'll leave you with hopefully a good year remaining.